The previous several years have seen a notable growth in demand for Tesla's EVs despite heightened competition in the EV market. While there have been past signs that Tesla's order rate has been rising to all-time highs in many of its markets, particularly after petrol costs increased earlier this year, there have also been rumors that the business is facing a decline in demand. Greetings from Everything Tesla stock once again, everyone. Aside from inflation, one of the biggest issues facing EV manufacturers and companies this year is the supply chain, as many are finding it impossible to get through the highly challenging market conditions in order to increase production of electric vehicles. Although there is a rapid shift from internal combustion engines, ICE, to electric vehicles, which has expanded the market for Tesla's EVs, some people still think that the company's EV sales are gradually declining. Tesla has seen tremendous demand for its EVs in recent years. Is this really how much demand there is for Tesla cars? We're going to find out soon though, but before we do, remember to like, subscribe, and enable notifications so you can stay informed about everything Tesla is doing. As it continues to increase car production, Tesla has maintained its position as a top automaker for the past 10 years. There are questions, meanwhile, about whether Tesla now enjoys the same kind of strong demand for its electric vehicles as it had in the past. Adam Jonas, an analyst at Morgan Stanley, believes that demand destruction is most certainly occurring for Tesla. The analyst stated that shorter lead times and price reductions in the upcoming months will be a reflection of the downturn in demand for Tesla cars, which led him to lower his base case price objective for Tesla stock from $383 to $350. Fortunately, this hasn't happened yet, which is one of the reasons why some other analysts think Tesla doesn't really have a demand issue. If Tesla's lack of demand were an issue, it would have already pulled certain demand triggers, the most significant of which being its price. Given the high level of demand, Tesla is anticipated to reduce its vehicle prices. On the other hand, over the past 2 years, Tesla's prices have increased steadily, and its car gross margin has reached a record high. Car costs don't appear to be going down anytime soon. Tesla has the financial capacity to lower prices slightly, but this hasn't happened yet. Even if the automaker decides to lower prices in the future, investors shouldn't be concerned because that will significantly boost demand. Apart from maintaining consistent car prices, Tesla has been doing exceptionally well in the majority of its markets. According to a recent tweet from Tesla New York, Tesla was the best-selling vehicle in Germany at the end of September. In just 1 month, Tesla registered 9,846 Model Ys in Germany, according to KBA data. In September, 224,816 cars were registered, 44,389 of which were new SUVs. Approximately 4.5% of the German automobile market and over 22% of SUV sales were accounted for by the Model Y alone, based on the number of registered vehicles in this market. This month, 3,878 Model 3 registrations were made in Germany, demonstrating the Model 3's strong performance. It's not bad to note that over 6% of German automobile sales were accounted for by Tesla's Model Y and Model 3. Not only that, though, September saw the Model Y continue to be the best-selling SUV in China. Data from the China Passenger Car Association indicates that Tesla sold 46,694 Model Ys, up 41.4% from roughly the same time last year. Tesla was able to maintain its lead against BYD Som, which came in second with this number. A significant ramp-up in production has occurred at the majority of Tesla's gigafactories, leading to the increase in vehicle manufacturing. With the recent modifications to the production line, Tesla's Shanghai facility is producing a lot more Model Ys now. If this continues, the electric SUV should be able to stay in second place for the rest of 2022 and possibly even take the top spot in the last quarter of the year. Similarly, in September, Tesla delivered 83,135 electric vehicles, EVs, manufactured in China, an increase of 8% over August and a record for Tesla's Shanghai factories since the start of production in December 2019. Following a July production halt for an upgrade at the Shanghai facility, Tesla expedited its supplies to China, increasing the factory's weekly output capacity to approximately 22,000 units from June levels of approximately 17,000 units. Without a doubt, this plant is producing cars at the highest level possible. Additionally, Tesla raised output at its recently opened Berlin factory. The automaker said earlier in October that it has successfully increased production at its Gigafactory in Berlin to 2,000 electric vehicles per week for the first time. This is a huge accomplishment for Tesla, and with more manufacturing at this location, the automaker can meet its current target of producing 5,000 cars per week. Apart from China and Germany, Tesla vehicles have also dominated a number of other auto markets, with the Tesla Model Y ranking first in New Zealand and second in the UK. The company has experienced a notable upturn in sales throughout Europe. It didn't work out that way, despite some analysts' predictions that Tesla would lose market share if additional electric vehicles were introduced to the European market. In reality, Tesla has proven to be incredibly resilient in the face of fresh competition. The demand for electric vehicles is significantly larger in Europe than it is practically any place else on the earth, making it a sizable market for EVs. Because more brands are always entering the market, there is also much greater rivalry. Therefore, the Model Y's ranking as the best-selling car here is quite an accomplishment. Pierre Ferragu, the managing partner of New Street Research, stated that he believes Tesla will face unheard-of demand in the future during an event hosted by the company in August at its Gigafactory in Berlin. He claims that the demand is far higher than what he had anticipated a few years ago and that Tesla and its rivals would soon find that electric cars are too common. Market shares will primarily depend on how well they can increase automobile volumes. He also noted that Berlin's plant is actually more efficient than Tesla's in Fremont. There are more signs that Tesla is in high demand, but there are also certain things that could raise questions, such as the wait times for Tesla EVs in some areas. For certain of its electric vehicle models, Tesla is also seeing modest reductions in the wait periods for deliveries on new orders, which some have theorized may be a sign of declining demand. In response, Pierre Ferragu said that a decrease in Tesla's wait times does not necessarily indicate a decline in demand. According to his analysis, the recent abrupt 40 to 60% decrease in wait times for new orders simply signifies a backlog normalization, not a drop in demand, he continued. He emphasized the significance of comprehending wait time fluctuation once more. Wait times will remain volatile, even with orders steadily growing due to irregular increases in production capacity, the author said. Although indicated wait times have decreased, our analysis unequivocally indicates that orders are reaccelerating this quarter. Ferragu anticipates a rise in orders and deliveries over the course of the remaining part of the year, while the backlog at the end of the quarter and wait times continue to decline. The automaker is seeing improved production localization at Tesla's Gigafactories in Berlin and Texas thanks to production ramps, which is assisting in cutting wait times. Therefore, contrary to popular assumption, Tesla might be dealing with unforeseen delivery challenges rather than a demand problem. One of its best-selling cars in the US and Canada, the Model 3 Long Range, was discontinued by the manufacturer in August. This was done to prevent giving customers extremely extended delivery schedules. Obviously, as electric vehicles become more widely available, there is a present rush on them. In fact, more nations will keep enacting legislation to encourage the manufacture and sale of these vehicles. In the near future, rising petrol prices and the soon-to-be-law government EV incentive should contribute to the growing popularity of EVs. Another explanation for the observed low demand could be the anticipated tax credit, since purchasers would be holding out for a period when the credit is applied and EV prices drop. Until the manufacturer begins to impose some demand limits, a long-term Tesla bull shouldn't worry too much about the desire for Tesla. Tesla is in a great position to capitalize on the growing demand for electric vehicles as it continues to soar in a number of international markets and as numerous national governments continue to offer incentives for EV sales. The demand for T